everyone, welcome to another episode of Money Modesty. And today we are talking about a energy company, and that too a dominant green energy company, JSW Energy. So it's a company which is a part of a bigger group of companies of the JSW group. They are into steel and whatnot, other manufacturing also, but energy is also one of their key domain where they operate. So just to give you an overview, so under JSW Energies, they are currently generating a power of around 6,677 megawatts, out of which 3,000 is thermal power, 1,300 is hydropower, 1,400 is wind power, and 600 is solar power. Why these numbers are important? These numbers are witnessing that it is not focused on any particular segment of energy generation, and it has omnipresence. It is present across different kinds of energy generation, and it has the capability as well as the capacity to do that. As we move towards more green energy, more solar energy, more wind energy, this company is well equipped with the technology and resources to implement those changes and expand its operations. Now, just a good news for JSW was recently on Feb 5th, it got a project of 1,600 megawatt in West Bengal, a thermal project though, but it grabbed that project, and it is a big win for JSW Energy, and we will see the reflection of this in the upcoming quarters as we get the buy-in from the stakeholders and the money from the people involved on the project. The next good news was NCLT, the National Company Law Tribunal, recently approved the bid of JSW for occupying or undertaking KSK Mahanadi powers. So this is not just a win about acquiring a company. It is more from a standpoint that what is the JSW Energy expecting in from future. It is very optimistic about its future, and it wants to expand its horizon. That's why this acquiring and the other things that are happening in parallel. So JSW Energy is very aggressive right now. Another thing, there was a statement released by the CEO of JSW Energy where he mentioned that they are on track to reach the 10 gigawatt capacity by 2025. And then the other important thing was, he mentioned that this quarter was a little bit slow, the last results, because of lower demand, monsoon, and lower government spending. But people can expect that the March quarter will be way better, and there will be improved growth in terms of numbers and the financials. So that is pretty good. And overall, they are about to release a strategy roadmap 3.0, they've named it, in the first quarter of next fiscal year, as the CEO mentioned. So the outlook of CEO, or the perspective of CEO of the company, looks promising and positive as well. So in the near future, we can see even better results and numbers from the company. Now, another aspect of the company, the take of different agencies of funds. So Morgan Stanley recently has initiated an overweight rating with a target price of 545. It doesn't matter what is the target price, stop loss price, or what. But if agencies like Morgan Stanley, banks like Morgan Stanley is getting interested in a script, they are doing due diligence of a script and giving an overweight category to that particular stock, then it really means that they have done their due diligence and there are some fundamentally good things happening in the company. That's why they have increased their rating on that particular stock. That looks also promising. Now, diving into the financials. So at a quarterly level, if you see here, so for the last 4 quarters, we've been seeing a growth of almost 10% every quarter, which is pretty decent. And then we are seeing the increase in profits as well for the same time. So here, it cannot be a straight away apples to apple comparison for FMCG or manufacturing sector, because energy sector is relatively tricky. When you invest, when you get the payment, it can be quarter independent. You install a project and then you have to wait for some time to get the payment of that project, or vice versa as well. So it is not an apples to apples comparison. So a better representation or better depiction of the actual story would be the annual statements. So if you see here, for the last 3 years, if we see from 2021 to 2024, 7,000, 8,000, 10,000 and 11,500. So at an annual level, we are seeing an increase of on an average 10%, 20%. Overall level, the profit is also increasing, and the operating profit margin that you see here is pretty huge. It stands at 47%. And as compared to last year, it was just 32% last year. and right now it stands at 47%. It might be driven from the fact that of the delayed payments or whatnot. So another important thing would be the shareholding pattern, and we see that the shareholding is stagnant at a quarterly level for SIS. At least if you see that it was up until March 24, it was staying at 8, then it went up to 15% in June 24, and then it has been around 15% during that time frame. At a yearly level, if we see also, then this gives you a good picture. So almost for the last 3 years or 4 years, from 5% to 15%. So the FIIs are getting a lot interested in this particular stock. Almost 3 times. They have increased their holding by 3 times in the last 3 years. So that's a big increase. And FIIs, if they're making a decision, they're not making a hasty decision. They do a due diligence and they invest in the future of a company. That's why typically we see a company gets popular after 2 to 3 quarters of buying by FIIs or DIIs. So they get into the company, they read the initial rally, and then when it is into the public, in the news, and then the retail investors get into the company based on the hype around the company. So if they are interested, they are showing a faith in the company. That really means that they have done the due diligence and they are optimistic about the future of the company. Not talking about the DIIs, there we see stagnancy or saturation, I would say. It is at 10%, which is not bad at all. It stays at 10%. And the good news is the public holding is going down from 8% to 6%. So this is personally, it might not sound great, but if the public percentage is going down in a particular stock, then it is a good win for me, because public is like a decision maker in the retail sector, is very news dependent, is very dependent on the people's advice and whatnot. They typically don't do any due diligence for that matter. So if we are getting good amount of interest from FIIs and DIIs, then it is good, and the percentage of FII DIIs increasing, then it is also good, but public decreasing is considered as good. So on an overall level, the company looks good. And as we move towards more sustainable energy sources, this company is in a sweet spot with good projects lined up and the expansion plans as well. And also, since we have a UN climate change conference in November 25, we can expect an even more focus on green energy from the government side, and the push will further improve the financials and the fundamentals of this company. So on an overall level, a promising order book and a good rating from different agencies, this makes this company suitable for long-term investment. You might see some downside in the short term, but if you're looking for long-term opportunities, and this is the right opportunity for you, and this is very well positioned from a 3 to 5 years horizon. Thank you. And if you like the video, hit the like button and subscribe to our channel for such videos. Also, please comment if you really like the video and it helped you make a financial decision. And bye-bye.